Did you know Goldman Sachs just poured over $2 billion into Bitcoin ETFs in 2025 alone? That's a Wall Street titan going all in on crypto. Ready to see why? Hey, deal makers! Welcome back to DealMaker Diaries, where we unpack the plays that shake up fortunes. Today, we're diving into a blockbuster move. Goldman Sachs, one of the world's biggest investment banks, is betting billions on Bitcoin. In their latest SEC filing from February 2025, they've stacked over $2 billion into Bitcoin exchange-traded funds, $1.27 billion in BlackRock's iShares Bitcoin Trust and $288 million in Fidelity's Wise Origin Fund, plus hefty options plays. This isn't pocket change, it's a seismic shift. Why's it matter? Goldman's a financial kingpin, and their plunge into crypto signals a new era for digital assets on Wall Street. Over the next few minutes, we'll break down why they're doing it and what it means for the money game. Let's roll! Bitcoin's had a rocky road with the suits. For years, traditional finance, like Goldman Sachs, kept it at arm's length. Why? Skepticism runs deep.
For instance, could we see truly a lot of major multinationals putting Bitcoin on their balance sheet and that kind of thing?
I think it's conceivable, yes. And I think as we've started to see, over the last year and a half, a lot more clarity, probably outside of the US. I think there's obviously been a big spike in the valuations across the whole crypto suite, as we've seen since the US presidential elections.
Crypto's wild price swings, $109,000 in late 2024, then dips, scream risk. A 2024 CoinDesk report said 60% of institutional investors still see Bitcoin as too volatile for serious portfolios. Then there's the stigma. Hacks, scams, FTX's collapse in 2022. It's been a PR nightmare. Regulators aren't fans either. The SEC's been slow to bless it. Banks like Goldman face their own hurdles. Their wealth management CIO, Sharman Masavar-Rahmani, said in 2024, "We don't see value in crypto," a hard no. Clients weren't begging for it, and the old guard feared it'd disrupt their cozy profit models. The challenge? Proving Bitcoin's not just a fad, it's a legit asset class. Goldman's $2 billion bet says they're ready to flip that script. So, why's Goldman Sachs diving in now? It's all about strategy and timing. First, market trends. Bitcoin ETFs exploded in 2024, $114 billion in assets by early 2025, per Apollo data. BlackRock's IBIT alone hit $56.5 billion. That's a regulated, easy entry ramp for institutions. No messy wallets, just ticker symbols. Goldman's grabbed 24 million IBIT shares and 3.5 million FBTC shares, up 88% and 105% from last quarter. They're riding a wave. Spot ETFs saw $4.4 billion inflows from January to February 2025, says Zacks.
And so therefore people are getting confidence. And as you start to see more institutions come in, I'd expect it to be traded like other asset classes, structured products and things like that.
And so in other words, more derivatives based on...
Well, potentially like structured notes. And I think as you start to see the ecosystem build out, you'll see clients have demand for different types of products, as they do for any other asset class.
100%.
So I don't think it'd be any different.
Next, returns. Goldman's not just holding, they're playing options. $157 million in IBIT calls, $527 million in puts. It's a hedge and profit combo. If Bitcoin climbs, say, to $150,000 by 2026, as some predict, they cash in big. Finally, the digital shift. Goldman's spinning out GSDApp, their blockchain platform, in 2025. Think tokenized bonds, real estate.
And a lot of initiatives have gone live, but not many have reached scale. And part of the issue is because it's hard to get your competitors to join a platform you've launched, especially if it's branded Goldman Sachs or JP Morgan, and it's hard to get the other bank on board. So the idea is if you create an industry-owned utility of sorts, then it's more likely to scale and get commercial applications. So I think this is what they're aiming for, to make it industry-owned.
Bitcoin's their gateway to that future. They see crypto's $2 trillion market cap as a toehold in a $5 trillion blockchain boom city forecasts by 2030. It's not charity, it's calculated greed. Here's the moment it all clicked. Q4 2024, Goldman Sachs files their 13F with the SEC on February 12, 2025. The numbers drop. $1.56 billion in Bitcoin ETFs, up 120% from $710 million the prior quarter. Add $760 million in options, and they're past $2 billion. This wasn't a toe dip, it was a cannonball. The trigger? Bitcoin's late 2024 surge to $109,000, plus Trump's pro-crypto signals post-inauguration, lit a fire. Goldman's Matthew McDermott, their digital assets head, hinted at Consensus 2024, ETFs are a psychological turning point. The ripple? Wall Street's watching. JP Morgan's in for $1 million, Morgan Stanley's sniffing around, Goldman's scale dwarfs them. If they profit big, banks could flood crypto, pushing Bitcoin past $200,000. This isn't just a bet, it's a blueprint for finance's future.
You know, at the moment, from a regulatory perspective, we can't own, we can't principal,
right? We
can't be involved with Bitcoin.
But
Bitcoin,
you may be able to soon.
If the world changed, you and I could have a discussion about it.
But you want it to change. Is that something that your lobbyists in Washington would be advocating for?
I don't have a lot to say.
So, what's the deal, deal makers? Goldman Sachs' $2 billion Bitcoin bet is a power play. They've shrugged off crypto's shaky past, volatility, skeptics, to chase monster returns and a digital edge. It's about market heat, ETF accessibility, and blockchain's long game. That Q4 2024 leap proves they're not just testing waters, they're reshaping them. For Bitcoin, it's rocket fuel. Mainstream adoption's closer than ever. For markets, it's a wake-up call. Crypto's not fringe anymore. Goldman's banking billions on it. Could this flip the script on how we see money? Time will tell, but the stakes are massive. What do you think? Goldman's genius or gamble? Drop your take on their Bitcoin move in the comments. I'm all ears. If you like this, check out my other crypto trend videos, linked below. Hit subscribe, and let's keep decoding these deals together.